Welcome to our financial seminar. My name is Islanda Cuevas, and I'm the Business Development Rep at Hughes Federal Credit Union. I usually do these seminars out in the community, but due to COVID-19, I will be presenting to you virtually. Hughes remains committed to your financial future. Even as things shift, we're here to help you make wise choices with your finances and investments. Here are a few things to keep in mind. Your money is safe. We know that it's easy to worry during tough or uncertain situations, but you can rest easy knowing that Hughes and other financial institutes are here to safeguard your money and investments. Your money is safest with the credit union because government-backed entities such as NCUA ensure your deposits and protect your funds. Stay calm and watch for opportunity. As with any significant worldwide event, COVID-19 has left its mark on the economy. While it is understandable to want to withdraw money from investments and retirement accounts, doing so could potentially be devastating to your portfolio and long-term wealth. This is not the first or the last time that the stock market will fluctuate, and there may be some great opportunities to invest as the market changes. Remember to consult with a financial advisor to help you make the best decisions for your particular situation and stay on track to meet your financial goals. Be aware of scams. The FCC has reported that scams related to COVID-19 are on the rise. Be cautious when answering phone calls from numbers that you do not recognize, as there are reports of robocalls and text messaging scams offering virus testing kits, fake cures, bogus work from home opportunities, and false loan to debt repayment offers. Scams related to coronavirus relief plan are also on the rise. The FCC is warning consumers to beware of scammers trying to get a hold of your stimulus check. Beware of calls, text messages, emails that promise a speedy delivery by paying a processing fee. The IRS will deposit your check directly into your account provided on your 2019 return, or will mail you a paper check. We are here to help. If you are experiencing hardship as a result of COVID-19, please send us a secure message online or call us at 520-794-8341 to see if we can tailor a plan to your specific needs. So now I'm going to move on to our Build a Basic Budget, the 5-Step Spending Plan seminar brought to you by Hughes Federal Credit Union. I encourage our members and people in the community to discuss this topic with their families openly and honestly to help set expectations. So let's move along. Here are the 5 steps. Step number 1, you will list all your income sources. Step number 2, determine where your money goes. Is it a fixed expense or variable? Step 3, balance your income and expenses. Step number 4, review your income and expenses and remember to communicate your new spending plan. And finally, step 5, you will manage your system. To help you develop this, you will need to go on to the next page. So with that, we will go on and see step number 1, list all your income sources. To help you develop your own budget categories, there are many different budgeting sheets on the web. No matter what form you use, tailor it to your specific budget category. Along with this presentation, we are also attaching our handouts, so you will have access to that handout yourself. Find the form that looks and feels most comfortable for you. No one form is right for everyone. So let's go back to our income sources. This is our paycheck, dividends, interest, pensions, Social Security, rental income, bonus, gift, child support and alimony, earned income credit, tax refunds, and other. Step number 2, we will determine our monthly expenses. So here is a list of expenses. This is only an example of what fixed, flexible, and periodic expenses look like. So the first one is fixed, which can sometimes be your mortgage payment or your car payment. These are usually payments that we do once a month. Flexible spending, this is your food, clothing, utilities, and gifts. So this tends to fluctuate. And then the last one, periodic, this is your insurance or your taxes, which are usually once a year. If you're on a budget plan with your utilities, remember that you can consider that as a fixed expense, but remember that you can always implement many different energy saving ideas throughout the year to cut down on those costs over time. Here are some categories of the expenses. So our basic needs. These are our needs for survival. This here is our shelter, food, utilities, insurance, medical, debt payment, and taxes. Discretionary, it's not necessarily for survival, such as vacations, entertainment, special clothing. Personal expenses, you don't have to account for every single penny. And then miscellaneous are those unplanned expenses. We don't want to use this as a catch-all category because what would happen is that it makes it difficult to track exactly where your money's going. So if you use the miscellaneous category for unplanned expenses, you should also plan for the unexpected. Build in a reserve for when the refrigerator dies, when the car needs repair, or when we have medical emergencies and so on. If the miscellaneous expenses are more than 10% of your income, you may need to do a better job at tracking your expenses. This slide here has what we call our tracked spending methods. So what I encourage people to do is to use several methods and see which one works for you. What's worked for me, I remember growing up while I was in college, I used the receipt and envelope method to help me stay on a budget. The receipt method, ideally, you want to keep your receipts up to 3 months, group them by category, add each category, divide it by 3, and that's your average monthly expenditure on that specific category. Now, the next one is the envelope method. You can use it one of 2 ways. The first one, you can write categories on envelopes and place receipts in them to keep track of how much you're spending. Or to budget, you can allocate cash in each envelope and then spend it that way. Checkbooks and account books are self-explanatory. And then computer programs such as Quicken, Microsoft Money, or QuickBooks are an excellent tool. However, you must have discipline and enter data regularly. And then, of course, we have our new online mobile banking. We also have different apps. Hughes Federal Credit Union has a great platform. It's called My Hub, Hughes Unified Banking. And what this does, it connects all of your accounts from different financial institutes. It helps you with goal setting and savings. It cleanses your accounts and it guides you to a budget. So where does your money go? The little things tend to add up. So once you start tracking, you'll find out where your money's really going. Then you can identify your spending leaks. Let's take a look at these images, for example. Every time we purchase a water bottle, that's money. So it adds up. What I highly recommend is you buy a refillable water bottle, refill that. It's good for your wallet and for the environment. And then what about our morning coffees, whether if it's a latte or a cappuccino? Those can range anywhere between $3 to $7 and can really add up. We have online shopping and retail shopping, where sometimes we tend to over splurge and spend. Eating out can also accumulate, whether you're going to a fast food restaurant or a nice fancy restaurant, that can also be an expense. And of course, buying the latest and greatest toys for our little ones. We always want to give to them, and sometimes we go into debt to get the latest and greatest toys. Step number 3, this is where you get to balance your income and your expenses. So this is where you will build an effective spending plan and where you want to see all of your income, that's everything that's coming in, with all of your expenses, everything that's going out. These should be equal. So here you see, how does your cash flow? The goal is to match your income with your expenses. So if your income is greater than your expenses, that means you can save more. But if your expenses are greater than the income, that means you need to make a change. So once you start tracking where your money really goes, you'll get a sense of whether you're on track and spending less than you earn. Matching your income with your expenses is the step that many people don't make time for, but it's important to do if you wish to make the most of your resources and achieve your goals. Based on this analysis, make adjustments as necessary to your spending and savings habits. Remember that savings is an expense category. So as you get your expenses under control and as your income increases, put some money into some sort of savings account. Some savings accounts earn more interest than others depending on how much you have in the account and how long you leave it there. For more information, talk to people at our credit union about what kind of savings is right for you. Here is the cash flow statement. Again, with the handouts, we will be providing this to you. So you see this cash flow statement. It's an excellent resource, and I will also show you a second example, but just find this as a financial tool that's right for you. So what you see here are two columns. The column on the left is your money coming in, such as your salary, gifts, interest, dividends, alimony, child support, sales of investment, and capital gains. And then you have your column on your right, that's money going out, food, housing, insurance, utilities, recreation, savings, transportation, taxes, clothing, gifts, education, donations, and other debt. So it tells you where your money went last year. It forces you to look at the money coming in and the money going out, and the two columns must equal. It is so important to match your income with your expenses. So again, the handout will be listed here. We also have an example. So this person's total income is $40,047, and you can see how it equals out to the total expenses. You will have the opportunity to do the same thing for your records. So by tracking where your money goes and comparing your income with your expenses, you can identify spending problems and make adjustments. So either you might need to increase your income or reduce your expenses. Savings is considered a regular expense here. Why, you may ask? So you can get into the habit of paying yourself first, rather than just saving what's left after then paying all your bills. So if you make a savings, whether if it's $50 a month or $5 a month in expense, you're more likely to build an emergency fund you can use for when the refrigerator dies or when the car needs major repairs. Get into the habit of regularly saving part of each paycheck and pay yourself first. There are so many other different expenses that are not included on the cash flow statement. The more detail you are, the better. This is only a sample to get you started. Step number 4, you will review and communicate. So remember to review and communicate your spending plan. Number 1, you will continue to track your expenses. 2, you will find your places to save. So this are your spending leaks. This is where you really get to do the work. You analyze and revise your plan, and does your plan fit your goals? So remember that we're already talked about different tracking methods, such as the receipt method, envelope method, computer programs, MyHub. But after you find your spending leaks, analyze your plan and see if your plan fits your goals. So what are some examples of changes that we can make? Some examples here are eat less fast food, delay some purchases, hold some sort of garage sale once we're back on that normalcy, drink less soda or coffee. Little things add up, so make changes in that area. If you have an opportunity to barter or exchange, like swap babysitting services, do that. You know, whatever it takes to save that extra money. I personally use coupons or Groupon. That helps me save money. And it also, if I know anyone who is willing to give me a discount or any company, I always ask. You never know, they might offer a discount. And then, of course, we have pitfalls that can destroy your spending plan. So pitfalls, these are the unexpected, things that we do not prepare for. So as you review your spending plan, remember that there are many different situations, things that we can plan for and things that we cannot. These have a potential to affect our budget. So things such as medical emergencies, holidays, many of us tend to go into debt so that we can buy the latest and greatest toy. Some vacations, I always suggest people to go on vacations on a budget. Of course, repair bills, auto accidents, and lack of an emergency fund. So these are just a few examples of situations that can truly throw a wrench in your plan. Here are some additional examples that drain your budget dry. Things such as parking tickets, unread subscriptions, ignored repairs, leftover food, quick car acceleration, air moisture leaks or eating out frequently, unused phone services, late fees, water left running, leaky faucets, lights left on, impulse shopping, and unused accounts such as Hulu, Netflix, and HBO. This is on a smaller scale, but day-to-day pitfalls that can really drain your budget dry. Here are some practical money savings tips. This is probably my favorite slide because it really gives you a hint of how you can start saving your money. So here are some hints, okay? The first one, number one, pay off your debt with the highest interest rate first while making minimum payments on all others. Refinance your mortgage. So you can refinance or consolidate. Consider consolidating your debts only because it includes the debt with the interest rates that's higher than the consolidation loan interest rate. You can also ask your credit union to run the numbers to determine whether refinancing a mortgage or even an auto loan makes sense for you. I always suggest to call at least 3 insurance companies for quotes. Make sure you compare apples with apples when comparing your coverage. And always shop for a credit card like you would shop for anything else. Consider the annual fees, the interest rate, grace period, over the time limits, and penalties such as whether the interest rate increases if you pay late. Also, use credit cards wisely. Only charge what you can pay in full, eliminate late payment fees and pay on time, and understand your terms and conditions of each card. Here are some more money savings tips. You can send in rebates or use coupons. There's plenty of coupons online that you can use now. Don't go grocery shopping when you're hungry. We tend to buy more than we need. Brown bag it, which means to bring lunch to work if you're still out in the workforce and you're an essential worker. Adjust your thermostat and use ceiling fans to save on energy. Drive sensibly to save on gasoline. And then make savings a habit. Payroll direct deposit, where you just direct your a certain amount to your savings account. You also use the Holiday Club account, which is a great account Hughes Federal Credit Union has for our members that helps you save money so when the holidays come about. We also do automatic withdrawals, and you can also save 1 year's raise. Step number 5, you will manage your system. So the 5th and final step in developing an effective spending plan is to commit to manage your system for the long term. The key to any successful spending plan is to get into a habit of managing a system that works for you. So you will track your expenses regularly, pay your bills regularly, balance your checkbook monthly, review goals annually, and after any major life changes. And then does your plan fit with your goals? And then as you can see, you need to start with the end in mind. Always keep your goals in mind as you develop your roadmap for spending. And finally, you want to develop your personal action plan and do it now. So what you'll do, you will find your spending leaks and work with that, learn how to budget, and then you will get your SMART goals by making them specific, measurable, adjustable, realistic, and time-oriented. And then also try several tracking methods and then use the one that works best for you. Use your spending plan, worksheets, and the cash flow statement to help you reach your goals. And finally, give yourself an annual checkup that make adjustments as necessary. Our lives tend to change a lot, so you always have to be making adjustments as you go. And finally, I want to share with you our resource for financial literacy. This is an amazing platform that Hughes Federal Credit Union has for our members and people in the community. It's free. So if you go onto our website, Hughes Federal Credit Union Financial Guide, and let me take you to that page, you can see here that we have the tools that support your needs for financial independence. We have financial calculators that help you calculate how much you can afford to borrow, whether if it's a mortgage or a car loan payment. And then we have different types of calculators. We have Money Coach at Hughes, which is a great platform more geared towards adults. And what this is, they're different modules to help you guide you through your financial life. And they're usually 10 minutes each, compatible on all mobile devices, available in English and in Spanish. And it really helps you get through any uneasy or build assurance for your financial future. Money Coach for Students is also an amazing platform. This is more geared towards the little ones and young adults that are learning about finances. So for the little ones, it has an entrepreneurship and how to save money. And then for the young adults, it helps them save money for college. And then we also have Hughes Federal Credit Union Financial Services, where we have financial advisors that can help you save money for retirement, build investments, or pay for college. So thank you. It's been a pleasure to serve our community and be able to support this. Again, my name is Irlanda Cuevas. I'm with Hughes Federal Credit Union, and please be on the lookout for our Power Over Debt, which will be coming up shortly. And if you have any questions, comments, or concerns, you can reach us at marketing@hughesfcu.org. Again, that's marketing@hughesfcu.org. Thanks again. It's been amazing being able to present to you virtually. Stay safe and be healthy.